Good afternoon, Scott Redler, T3Live. Welcome to today's recap. So we woke up this morning, everyone saw the S&P futures up about 35 handles. And a lot of us were trying to find that oversold bounce last week, which was non-existent. We tried buying a little bit on Wednesday, didn't work. On Friday, you actually had a trade, but then at the end of the day, everyone got stopped out based on how ugly the market closed. And rightly so. The right trade was to get out, not to sit in it. And then you come in today, we're up 35 handles, and you're trying to figure out the right thing to do if you're flat. There are macro traders that are long, good for them. There are some people who contribute to the 401k every single month, like my wife does, 8%. So, she's happy on a day late today, but she doesn't look at her statements. And then the guys who are also doing the long course, whether it's a 529. So there are days like this that happen that are random, that are overall good for the long-term picture of the market. And then you had some strong stocks that also, remain investment quality, but are going to take time, especially when the market's in correction. And then you have the players like us who try to trade a trend, who look for momentum, and are a bit risk averse. So trying to find that bounce last week and then seeing the market up 35 handles this morning was a bit frustrating. And I think everyone had a clear head, came in today, said, okay, let's figure it out. Typically what you like to do is in the first 30 to 60 minutes, market pulls in, comes off that low, you buy versus that low, and then you could add to it above the 60-minute high. And then you should trend the whole day. Okay, you should close close to the highs, just like some of the overseas markets did. But what we did today is made a low, made a high, and then at lunchtime, market failed all the way to about, 345 or even 355, and then, perked back up to close, decent. I guess this is the new normal, and I guess it's what we have to expect. And, what you could do is just, I guess, expect less and do whatever makes you feel comfortable based on your time horizon. So if you look here at the chart of the spiders, you'll see that I tried to outline a few different resistance zones. One of my resistance zones was like 119.20 to about 120.35, which was the start of the gap, and that's what held us early on. It would have been nice to have been able to, not open up so high and trade through this two-day pivot to actually make money up to this, this 119.71 instead of, if you look at how the market gapped up, look what the market did. A whole lot of nothing this entire day. And, if you look at the actual trading rule, it made the low. So you bought it, okay, just say verse that right around here, okay? And no, actually off the low, whatever. You could do it actually in 3 minutes, you could see it a little bit better. So if you look at it here, just so I can show you tactics on a day like today, this was the first, few minutes of the day. And, so when we pulled down to about, 119.31 and popped up, that was your buy, okay, around 119.50 versus that. Then your add was through the 119.57, and then even pre-market, I think we were up as high as here. This was even an additional add, and I think this is when people were kind of feeling good. And then market did absolutely nothing from 10 o'clock to 12 o'clock. So you really had 70 cents in the spiders here if you were perfect. And then it went sideways, dipped down, came back up, dipped down, came back up, and then started to fail. And guys who are risk averse, guys who tried to trade the trend, this is your little out right here, right? It just broke the range of the entire afternoon. Then it did get some downside follow through, and then look what it did at the end of the day. Pow, 3 big bars the last, whatever it is, 5 minutes, but that's it. But overall, on a macro sense, if you don't trade intraday, you look at the market and say, okay, market gapped up, pretty sizable, and held the gap. And now if you go back to the daily chart, you'll say, okay, you can't really see it on the spiders. I don't know why they don't show the gap. Maybe they'll do it tomorrow. We now have a new point of reference in the day's low and then the high. And then now if we see an inside day or so, okay, potentially we could push to close a portion of this gap and check out this 120, 72 area, which is the 50-day, which should be some pretty big resistance. And then even a little bit higher up would be a wall around 121.76. So just compartmentalize it. Apple did give you a bit of a trade. There was some success there. It broke below the trend line, closed there, somewhat gapped up, and really never looked back today. Engulfed these 2 days, showed some power. It's right back at these highs. I would say through this 378, perhaps 383 is in the cards, and that would be your oversold bounce. And then the question would be is, how does it handle this? Do we turn back lower and then really trade through the support, but this will give us some clues to the market. But there was a nice trade there. Wasn't a blockbuster like Apple usually gives you. Here was that range. Okay, here's your opening range. Made a new low, came back up. I think this is around where I bought it. And then I actually added a little bit too much through this 370, 350. But I guess I didn't see how far it came up, and then it went sideways, gave another little trade above 374, and then wound up making a high around into our resistance area of 377. So you had to just really hold a little size, and then came off methodically, and then perched back up with the market. But here, this was a little bit better of a calculated trade. This would be like trade number one right here, and then if you did buy the highs, it never really violated it. You could have held, and then this was like trade number two. Amazon also gave you a bit of follow through, nothing so great, because yeah, awesome, huge gap up. You had to buy it last week. So with today's trade for the intraday trader, perhaps you had a small little flag right here. I think this is where I bought a little bit, and then I tried to hold some for the majority of the day. Sold a little bit, got stopped out of some, and then I took home some just because perhaps Amazon that closed in the highs has engulfed these 2 days, a little bit of a guerrilla trade, and we could see another day or so. I don't think it's going to be a blockbuster. I know it definitely gets a little tough when you're trying to fill a gap, but and it's going to be a wall of resistance here, so I don't even know why I'm even taking this home long. Looking at it, there's not much there, but maybe they come out with some Cyber Monday sales, and then we get another push, and then we'll figure out what to do from there. Some banks that were the problem spot today, something like a Goldman Sachs. It had a nice move off the open, pushed through this mini pivot. Remember, we drew this morning, pushed through pretty quickly, and then just failed with the rest of the banks. Where if you look at the chart of this intraday, definitely not easy. You had a big gap up, and then it wedged, and really never saw the light of the day thereafter. Once it broke to the downside, I think more people made money with this short and weren't really looking to get long. I know I got pegged a few times from some sales traders saying they were shorting the banks, the weakest group, and they made some money, and rightly so. It is the weakest one, so why not go after it? And if you look from when it broke this wedge, this looks actually pretty. This is at least a setup. You would just would have thought that it wouldn't have done this today, because after one day you'd think you can get more than a half a day bounce, even in the banks. So this was a nice little setup here that broke to the downside. Guess it paused right around the previous high, and then just worked its way lower into that last tick like the rest of the market. If you go back to the daily, I guess there's still some room here to retest this broken area of 98-ish or 96 to 98, but to trade it might be very difficult. Bank of America grasped to hold on to that 513 area, closing with a red bar after gapping up. This not so still holding this low here, but this will be something for us to watch as we move close forward. If we start to break below 513 or $5, you're going to see some psychology start shift, or not to say it shift because it's already really negative on the banks, but you'll see some uncommitted long start to sell, as well as maybe it trickles around. The OAHs, let's see here, same type of thing. Gap up above the 2-day high, into the resistance, into the moving averages. Hard to make any money coming in flat. I guess we'll see how this develops pivot-wise to see if we could trade it through there. Let's see the XLI. Close with at least a green bar above the 50-day. Yeah, I think that's okay. Let's see what the RTHs did. RTHs also not on the highs of the day, but it filled the gap. So the RTHs are the first sector that filled the gap from back in November 21st. If you go back to the spiders, you will see on November 21st, which was right here, okay, you had a gap down, and here's a gap, and it hasn't been filled yet. If you look at the RTHs, which I guess was the reason why we were up today, all the great sales, filled the gap, so it's still showing some relative strength versus the S&P, so this sector still remains somewhat better than some of the others. And if you look at like DEC, Green Day, okay, so at least this closed on the high, so this will give you some follow-through if you bought dips today. Under Armour, green, look at that, closed green, closed on the highs, coming back into this range, so that looks okay. What did Walmart do? Pushed through, this little downtrend and somewhat failed. We'll check that out tomorrow. Lulu's been still under pressure, and it's not the Lulu of old ever since it broke this wedge. You look at it on a micro, I guess, chart, still holding by a grasp here. Still has some room, but we'll revisit that. As far as gold, so gappy. It's so hard. Unless you're just holding gold and forget about it, just stay there. Close a little bit off the highs. It would have been a nice trade to have been able to trade it through this mini pivot for an oversold bounce, but because they gapped it up, they took some away. Some of the miners on what happened with Randgold, this is some of the same old problems that they keep having. And as soon as you get some confidence, they start coming out with news that's disappointing. And it did come all the way into the support that we outlined here with Alex, came a little bit off it, but so hard to trust them. Hopefully when it broke 115, you ran for the hills, because once it broke this momentum area, you had to get out of the way. Let's take a quick look at Newmont. Newmont holding in a little bit better. This has a dividend. This has more liquidity, a little bit more institutional support. I guess as long as it holds a 64, it's okay. Maybe some momentum comes in if it breaks above this 65. And last but not least, let's just check out IBM. Very sloppy. Someone else was in here, I guess. I think where did Warren Buffett come in? And he did his buy, I think, around here. Let me take out some of these lines. It's still holding above some of the moving averages. It still looks okay. It's just, with the market, it's just taking its time. And from the highs through support makes it definitely a frustrating trade. And I guess now you could trade it reverse today's low of 180.67, but this too didn't show such conviction to the upside. Didn't close green, didn't have heavy volume. Sino was actually a good trade for the active trader today, because it showed some relative weakness. It went negative first, and then once it broke this key pivot area, you made good money. Okay, first from negative down to 60 was a decent trade, and then when it broke 60, it just cascaded. I know a lot of guys made money short, and some even played it on the bounce. There was some news that Muddy Water was going to list it or whatever. But really, I just like that it played by the rules. Okay, here was a gap up. It was one of the first to get to where it went flat. At 63, it went flat here. And if you look at this time bar here, this was what time was this? This was right around 10 o'clock. At 10 o'clock, if you look at the spiders, it was still, on the high. So as the spiders isn't even close to the gap, you look at Sina, and it was already well into going negative. So that was some relative weakness that people were shorted just because of that. And then the Muddy Water news came out, went down to 60, tried to hold. You had another secondary short right here, right when it couldn't bounce off that, when people were starting to come out in support of Sina, It traded through and gave you a 4-point down move, and then it retraced, and then it became a choppy trade. So all in all, you got to take what you can get. The market's still very dangerous. The market has a lot to prove. The oscillator went from like negative 100 to maybe negative 45. So there's still a few more days to work off the oversold condition. And then we need to figure out whether there's real commitment. And based on today's action, I don't think there's real commitment. I just think there are some trades. I just think that some people have to be in the market, took advantage of some cheaper prices last week, Wednesday, Friday, if they sold well when we broke the wedge at 1240. So they're maneuvering their portfolio. They're actively managing their trade. If they're in a 100 million plus fund and they have to be involved, this is what they have to do. Plus they have to sell some calls, and they just have to create cash flow and stay in the game that way. We could pick and choose our spots and wait for a better trending market and wait to have more clarity versus putting ourselves at risk. And when you do that, you're going to miss some trades, you're going to miss some gap ups, but you'll be better longer term. See you tomorrow morning at the call. Scott Redler, T3 Live. I hope you have a nice night.